In December 1930, a bank called the Bank of United States failed in New York City. The name sounded like a government institution. It was not. It was a private state-chartered bank, but that official-sounding name had drawn in hundreds of thousands of immigrant depositors who trusted it with their savings. When it collapsed on December 11, 1930, roughly 400,000 people could not get their money. What followed was a chain of bank failures that stripped billions from the economy and forced the United States government to invent a protection that every American bank depositor still relies on today. The Bank of United States was chartered in New York State in 1913, founded by Joseph Marcus, a businessman from the garment industry. The name was not chosen at random. State regulators at the time questioned it, concerned that customers would mistake it for an arm of the federal government. They approved it anyway, and the concern turned out to be justified. Immigrants arriving in New York, many of them from Eastern Europe, heard the name and trusted it the way they might have trusted the Treasury Department. Whether by design or by consequence, the name made the bank feel safe to people who had every reason to be cautious with their savings. After Joseph Marcus died, his son Bernard Marcus took over leadership and pushed the bank into rapid expansion through the 1920s. Branch after branch opened across the Bronx, Brooklyn, and Lower Manhattan, placing the bank directly in the neighborhoods where Jewish and other immigrant communities lived and worked. By 1930, the institution operated roughly 59 branches and held accounts for approximately 400,000 customers. By number of depositors, it was one of the largest banks in New York and, according to accounts from the period, among the largest in the country. Growth that fast required funding, and the source of that funding would become the bank's central problem. Watch the full breakdown on Wealthwright.